325,000 marquee investors across the world until now.
More than just business news, we're news for business people.
Good afternoon, welcome to Bloomberg Quint. Top headlines this hour. Indian markets continue to move upwards after exit polls results predict a victory for BJP in Gujarat and Himachal Pradesh. India VIX weakens. And Vedanta is the top gainer on the Nifty after brokerage firm Credit Suisse initiates coverage on the stock with an outperform rating. And it's a tepid listing for Shalby Hospitals. The multi-speciality hospital lists at a discount to its issue price of 248 rupees per share. The Supreme Court extends the Aadhaar linkage deadline for all services, including mobile phone connections, till April 2018. The final hearing will now be held on January 17. And the 14 working day winter session of Parliament begins with the government aiming to table as many as 25 bills for discussion and passage. Those are your top headlines. I'm Agam Akil. Up next is Hot Money with Darshan Mehta.
Thank you, Agam. Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then. Chintan Vora of finance.com. We have independent advisor Vivek Mavani who's joining us on the show. And Avinash Gorakshakar will join us. I believe he's stuck in traffic, but he'll be here in a while. So we'll get started with the stocks that we have to discuss. Today on Hot Money, we'll discuss stocks like TCS, IRB Infra, Natco Pharma Prataap Snacks and Godfrey Phillips. Let's start with the first stock, and that is TCS. TCS has been under significant amount of pressure for the past few days. Again, trading with a negative bias. It's down almost 8 to 9% from the recent highs. What's plaguing the stock? Is it a good level to start accumulating TCS? We'll ask our guest Vivek, what do you make of TCS? One of the most expensive IT stocks in that branch among the top 5. Is this a good opportunity for someone to start accumulating TCS?
Well, if you're talking from a long-term point of view, and when I say long-term, I'm talking of upwards of 2 year as a time frame. Definitely, TCS does make a lot of sense for genuine long-term value investors, and I'm using the word value investors. Now, all companies, all good companies over a period of time will reinvent themselves, find new growth avenues for them as there are shifts in the business horizon. So, and TCS is going to be no different. There have been concerns over the last 4 to 8 quarters about growth, especially in the US, especially also internally in terms of some of the large segments of revenue in terms of BFSI, which have had either no growth or very muted growth, less than 5% growth and stuff like that. And of course, on an extreme sense, questions have been raised about India's business model as far as outsourcing is concerned. I think it's too early to write TCS or any of the Indian IT companies so early. Over a period of time, they'll find their new growth avenues, whether it is artificial intelligence, digital, social media, or any other new things that we are probably not even aware of. That's one thing, and I'm absolutely certain internally they're preparing themselves for the future growth engines in that sense. Coming back to the numbers, two points that I will add to that. The September quarter numbers for what they delivered, high single-digit growth, doesn't really the numbers don't seem to suggest the gloom and doom that is made out to be. Certainly not. That's one thing. That's number one. Number two, US economy itself is getting much stronger, as if one were to go by the comments made by Fed just day before yesterday when they increased interest rates and the outlook going forward. So continued strength in the US and Europe on the business economy. I mean, it obviously leads to better outsourcing because companies have better budgets, higher budgets for outsourcing. Unemployment rates are lower, so outsourcing is then no more so much of a bad word as it was at the time of election rhetoric made out to be. Doesn't seem to be so bad. Last thing about the numbers, TCS continues to be one of the largest free cash flow generating companies, generating something like close to 25,000 crores of free cash flow every year. Even post buyback, they'll have, as of March 18, the year end, they should be having something like 40,000 crores of surplus cash and bank balance investments, liquid balances, what I'm talking about, which will allow them to be liberal on their dividend payouts. So at the price of about 2,500 that we are talking about, it trades at a dividend yield of something like 3 to 4%. Very few large cap companies, forget large cap, very few companies in the total market trade at 3 to 4% dividend yield. TCS is doing that. So in terms of, so long as you have the 3 to 4% dividend yield, I think the downside on the stock is very limited. Okay. 17, 18 times that as your screen seems to be showing in terms of based on the growth forward estimates of growth, I think it's a very, very reasonable valuation for a long-term investor.
Okay, what about you, Chintan? What do you believe is 17 times valuation fair, and what's your overall assessment for TCS?
So when you look at TCS as a stock, you compare last 4 years vis-a-vis the major indices like Nifty, TCS has not been, outperforming these major indices. Yes, I really agree the stock is under a lot of pressure. It's been giving a very timid kind of a growth with only 6% kind of a growth is what we see, coming September quarter end. So stock certainly is under a lot of pressure, but when you look at the kind of a business model of this particular stock, the major revenue of TCS actually derives in from businesses from retail and BFSI sectors. This sectors again has been under some kind of a pressure in terms of growth, with a lot of digitalization, requirement of cloud compounding which is increasing. A lot of automation has stepped into place, which further, at least for another 2 to 3 quarters, we'll see the stock to be under some kind of a pressure. It's only late in 2018 is where we'll see the stock getting a spike up. When we look at the kind of valuations, TCS at this point in time doesn't happen to be a very, it's very rightly priced kind of a stock. So when you look at a PE valuation of TCS, it's currently at 17, which is almost at par with 17, 18 kind of a PE valuations, which is at par with the industry valuations. So we see that the stock is going to be under a lot of pressure, at least for another 1 quarter to happen. And from 25, 60 kind of a level, we are seeing stock to be anywhere range bound, but with little neutral kind of view, which I completely agree to. And we are seeing some kind of a stagnation and consolidation which is happening in the entire sector coming in. So stock obviously is going to be under some kind of a pressure for another at least 2 quarters to come in.
Okay, so that's the view that's coming in on TCS. Vivek seems to be rather bullish on the counter valuations. According to him, fair. He sees a tremendous amount of potential in the counter. Chintan also does indicate the fact that everything is right, valuations are fair at this point of time, but at least for the next 2 quarters the counter will be range bound. Probably post that there could be that good traction that could come in. So that's the view, general view that we're getting in on TCS. None of a bearish kind of sentiment was reflected by any of the guests in on TCS. Let's move on to the next stock, and that is IRB Infra. It has rebounded very smartly over the past few days. Yesterday it was up significantly. In the last 2 days the counter has gained more than 10%. So that's the traction. There was some negative news that came in terms of a CBI inquiry in one of the land issues that was there. There was a big drop, and post that the company has managed to recover all that losses. So what's the theme for IRB? Is it a good bet? Should someone bet on the counter? We'll ask our guest. Chintan, I'll start with you. Any view on IRB Infra?
Okay. When you look at IRB as a counter, we are not too very bullish onto IRB. Rather, I would take again a stance as I took on TCS. We are very neutral onto IRB. If you look at kind of the profitability growth, the profitability has been on the decline for last 1 year YOY. But when you look at the kind of the cash flow which IRB as a counter is expected to generate with its 3 toll plazas coming up in Rajasthan, the collection is already started, and we see that Q3 of FY18 is going to be a really good booster in terms of cash flow generation for IRB Infra as a stock. Overall, when you look at the kind of projections, there has been an impact on GST. The traffic has been little on the lower side. Basis all these particular factors, and amidst this, the major toll collection that used to happen through Mumbai-Pune Express Highway, there has been approximately 18.5% kind of a spike up in prices of toll collections. So overall, there is a pull and push kind of factor which is playing a very critical role in case of IRB Infra as a stock. And one of the reasons we see that the stock expecting to be very neutral at this point in time.
Okay.
And a very limited upside is what we see.
Would you
on.
recommend someone if he's holding IRB to switch to a different infra stock or?
Okay, if somebody is already holding, we would certainly not ask him to switch to a different infra stock because overall the entire sector is under some kind of a pressure. For investors, it is always good to wait and watch for another 1 quarter span of time because as I say that the toll collection in Rajasthan has already started and this is going to give us a fair projection in valuations as to how.
So it's a wait and watch approach with IRB.
Sure.
What about you, Vivek? Do you agree or you have a negative view on?
Well,
IRB?
it's like this, that I have a very positive view on infrastructure, but very negative view on IRB, and there are specific reasons. I'll come to the positive view on the infrastructure and then subsequently the negative view on IRB. As far as infrastructure, I mean, we are in the new round of over the next 8 to 10 years in terms of investment cycle in infrastructure. I mean, Bharatmala, I mean, the announcements, and announcements made by the central government, but even the state governments are taking up a whole lot of projects of scale and sizes, and I mean the scale of ambition is at a new level never seen before in India. So a huge amount of investment is going to happen over the next 8 to 10 years, which is going to be well funded, unlike the last cycle where the lack of financial closures and other problems. So a lot of those problems have already found solutions within the government, and government working with the developers or contracting companies as well. So on the sector, I have no issues.
What's the issue with IRB?
It's pertaining really to IRB about the promoters' management. Okay. I mean, there have been corporate governance issues, there have been ethical issues, there have been issues about transparency, and the management from time to time finds itself in the news for the wrong reasons. So that is something which always plagues or creates a negative sentiment on the company. So in notwithstanding the growth, notwithstanding the very good assets or toll assets that IRB has, it doesn't lead to any positive sentiment on the stock, and it shows in the returns as well. So between losing an opportunity and losing money, I would rather let go of an opportunity in IRB if there is any. I mean, not to say that, I mean, a rising tide would lift all boats. So eventually IRB will also do well with other infrastructure companies from the stock price point of view. But I would much rather avoid that and maybe have participation in the sector, the growth in the sector by way of some other companies, or avoid it altogether. I mean, there's really no compulsion to be in IRB given all those factors. So that's my view. So positive on the sector, negative on the company.
Okay. So that's the view that's coming in on IRB. Let's. I think Avinash has just walked in. Bad traffic, Avinash.
Yeah.
Okay. So we've discussed TCS. Any view on IRB? We're just on IRB.
IRB, I would remain mildly positive, Darshan, primarily because roads are going to be a key area for the government going forward. And I think they have a decent visibility. In fact, the last 2 quarters were a little difficult for the company. But going forward, the management is hopeful that, the Rajasthan toll project should actually start giving them better tariff numbers. So hopefully, I think FY18, the third and the fourth quarter should be good. And this stock has always been in the limelight because it's more of an F&O stock. But if you look at the overall road toll, business in India, I would believe that yes, if one were to have the kind of risk appetite over the next, say, couple of years, this could be a good pick. But yes, in the short term, the stock could face a little bit of volatility, but definitely this business as a whole definitely has a lot of potential.
Okay, you missed TCS. They had their views on TCS very quickly. What would you make of TCS also?
In fact, Darshan, TCS is more of a defensive stock, so I'm neutral on the stock. Clearly, the kind of headline numbers which we are going to see over the next couple of quarters is going to be pretty soft. So I would believe that probably if things do improve on the US front, we get better kind of utilization rates, better kind of operating margins. I think the third and the fourth quarter is going to be also be a soft quarter. So all said and done, it's not a very expensive stock, but at the same time growth prospects appear to be quite limited. So if I were to invest in software, I would look at the smaller companies like say a Majesco, maybe a Persistent. There I would believe the operating margin structure would definitely be well positioned compared to a large company like TCS.
Okay, so that's the broad view that's coming in on TCS. The other guests had already given the view. Avinash is neutral but would rather switch to a smaller company in the IT space. But on IRB itself, both Chintan and Avinash did point out that, from the quarters going ahead, the Rajasthan project is something that they would watch out for. Avinash is bullish on IRB. There are issues as far as corporate governance that were raised by Vivek, and that makes him negative on IRB, not the space. He's bullish on the infrastructure space. Let's move on to the next stock, and the stock that we're talking about is Natco Pharma. The QIP is pending, but there is significant amount of traction. The counter on a year-to-date basis is up almost 75%. There's a lot of traction, has clearly outperformed the pharma index, and basically the big reason was the big approval that they got in for Copaxone in association with Mylan. Now, it's trading expensive, 27 times. It's more expensive than a Sun Pharma and almost more expensive than the frontline pharma stocks. But what should one do? It's a very niche play. What should one do with Natco Pharma? Chintan, I'll start with you. Do you have a view on Natco Pharma?
So you rightly pointed out, Natco Pharma at this point in time looks to be a little more expensive as compared to its overall sector peers. Look at the kind of a QAP, of 915 crores, which is on its way. I mean, about to be, striking into this particular stock is going to certainly give a lot of boost to its R&D kind of an activities.
Okay.
You look at kind of a run-up that a stock has taken is really significant, and despite it being a very expensive stock, we still see a lot of it is left. The kind of a segment and the pipeline research that it has got, this is what will make this particular stock really jump up. You look at the kind of a generics that it plays in, the kind of a niche, that we've already spoken about. This niche of the business that they actually operate in, this is something that we see that will give approximately 15 to 20% kind of a hike up into the stocks, despite it being very expensive here. There are a lot of new product launches that we are expecting in terms of Natco Pharma, and it being a very a small size stock as compared to its peers, still a lot of hit and a lot of value for investors is left to be made into this particular stock.
Okay, would this be one of your top picks in the pharma space as such?
Yes, you can call it so, because pharma as a sector, we are bullish. We are not too very bullish on the pharma sector, but certainly we see that pharma sector going forward is expected to do well, because most of the audits of FDA has already been taken care of. And that's where not a lot of glitches are being left, and the road happens to be very paved and clear for pharma as a sector. So this certainly happens to be a good bet when it comes to pharma as a sector for us.
Okay, Avinash, if I look at the Bloomberg consensus estimates, out of the 19 analysts that track the counter, 17 and have a buy and 2 have a hold. So it seems that the street is extremely bullish. So would you be pro-consensus or anti-consensus for Natco?
No, I think Darshan, this is one pharma company which has actually got, the kind of earnings trajectory which has come in till now is going to be getting better over the next, say, 2 years. In fact, the US market is going to see a very big leap in terms of top line. You mentioned something about the Copaxone, launch. I think it's a very large kind of drug opportunity, and I would believe that this is going to propel earnings as well as top line over the next, say, 12 to 18 months. In fact, a large part of the growth could be visible in FY19. The only concern for Natco could be possibly that Teva has filed an appeal against the current judgment which Natco has got. So if there is any negative surprise here, then possibly the stock could possibly face some sort of a surprise setback. But otherwise, earnings look to be very strong. And as Chintan pointed out, the QIP money is yet to come in, but a lot of money coming in could obviously boost their R&D effort. So I would definitely be a buyer if I were to take a slightly longer term call. This is one pharma company which has obviously got better visibility than the larger peers like, say, a Lupin or maybe a Sun Pharma.
Okay, that's the view that's coming in. Vivek does not track the counter, so he is not going to comment on it. But overall, both the guests have given an extremely bullish view on Natco Pharma, so it's a double thumbs up that's coming in on Natco Pharma. Before we move on to the rest of the stocks, here's a quick recap of all the guest views on the stocks that we've covered till now. Okay, the next stock that we're talking about is Pratap Snacks, one of the very few IPOs that have done well post-listing, and in fact it was one of the most expensive IPOs to hit the market from the FMCG space. It's up almost 45% from listing. The numbers were out a couple of days ago, extremely strong set of numbers which actually caused the counter to even rally. So is there value? It's trading at almost 55 to 60 times earnings if you take the second quarter numbers. Is it expensive what should one do with the counter? I'll start with you, Avinash. Any view on Pratap Snacks?
I think this is a recent listing, Darshan, so not much about earnings history. But I think if you see the Q2 numbers which came out a couple of days back, very strong operating metrics in terms of top line growth, EBITDA margin improvement. And I think the money which has been raised by the by the company recently, 200 odd crores, I think a large part of it goes for debt repayment, about 70 odd crores for doubling their snack capacity. So I would believe that yes, the earnings trajectory is going to be solid. Valuations are not cheap. I think they are expensive, but I think this market is a large market. If I were to estimate, I think the overall estimate is about 50,000 odd crores, and here there's a large portion which is serviced by the unorganized sector. So obviously the GST benefit is yet to roll out. I would expect that maybe FY19 could be a better year in terms of the actual benefit which the company could get from the shift from the unorganized to the organized sector, and probably valuations could remain at the same odd level. As they say, the expensive stock could get more expensive because supply side the stock is controlled by a few funds as well as by some HNIs, and I would believe that yes, as long as the operating metrics on the earnings growth and the EBITDA margins keep on improving, we could see the stock moving higher. We don't have a target price here, but we remain positive on this sector.
Okay, so that's the view from Avinash. Chintan, it's in a sector where there's not too much competition here. It's one of the very few. I think DFM will be the only one, and a lot of FMCG companies, they do command that valuation. So for Pratap Snacks, what are you looking at, growth or valuation? Because valuation is no doubt expensive. Are you happy with this valuation, or would you prefer to chase growth and valuation is fine for you?
So I'll answer this in two different parts.
Sure.
When it comes to valuations, it is certainly expensive valuations. But most of the time when we look at the valuations, it is also a matter of a fact to identify that what we see to be really expensive, is it going to be, a money-making machine or money-making kind of a counter for any investors to be looking into. Ever since its listing, you rightly identified, it's already up by some 40-45 odd percentage, and last 3 months if you look at it, it's taken a sharp run up of approximately 35 odd percentage. But look at the kind of a potential of this particular sector and a stock. Approximately 220 million odd kind of an industry, and completely an unorganized kind of an industry it is. Not many players, as you rightly identified, and what we see that this particular counter, though being very expensive, look at the kind of a market share it has got. It's not got more than 3.5 odd percentage kind of a market share of the entire industry put together. With its major brands like Diamond, it's already putting in a lot of energies into their marketing spends. There's a lot of adoption to this particular counter. Certainly, if you ask me about Pratap Snacks, rightly identified, it's too early to comment on the numbers, but it has got a very good growth potential, and we see at least, if nothing, at least some 15 to 18% kind of upside from here on for another 1 year to come in. So overall, the counter looks to be really good, and we are very bullish onto this particular counter.
Okay, so it's a 2 thumbs up that's coming in from the recent listing Pratap Snacks. Vivek, your view, would you agree or do you have a different view here?
Well, as far as the business of food and snacks is concerned, and I'll look at it in the larger domain of food, of the multiple growth themes in India, I mean the shift from organized to organized, unbranded, branded to packed and branded. I mean, food is one of the largest opportunities in India, where there's absolute level of growth itself, which is like high single digits. If you look at the packed and the branded, probably it's growing at high teens as a sector. To just one small correction or a viewpoint, that it's not that Pratap has got limited competition. Pepsi, which has Frito-Lays and all of the range, Haldiram's, all of it is competition to Pratap Snacks, or even your local what we call in Farsan and Mishtan. I mean, even that is competition. I mean, any kind of snacking is competition, including biscuits. If I may add, ITC is a very large player already. I don't really have the exact numbers of what, I mean, on a like-to-like basis, on a product basis, how much is ITC's business for what Pratap does, I mean, on the same segment. But to me, valuations don't really justify the current price. The sector will grow. Pratap will also grow its sales and earnings. I have absolutely no doubts on that. The management, I believe, post their second quarter results, guided at about 20-22% earnings growth. I would say probably they'll grow at 25%. I'm probably more optimistic on than the management themselves in terms of the growth opportunity. But yet at about 55 times, or if I may say 50 crores of estimated profit, net profit for the current financial year, perhaps about 63-64 crores for FY19, and a market cap of 3,200 crores just looks to me out of the whack. In the sense that I mean, I can't really justify. It's obviously expensive.
Okay.
I would rather look at ITC itself, which is one of the largest food players besides tobacco. I mean, the largest food company in the country is now ITC.
Okay.
I would rather play ITC, which is much more reasonably valued, much better fundamentals than any of these companies.
Okay, so that's the view that's coming in on Pratap Snacks. Two extremely bullish views that are coming in, both from Chintan as well as Avinash. Vivek does not share that view. He believes it's expensive. We would rather look at an ITC in the food business. And finally, the last stock, and we're running out of time, so this has to be fast. Godfrey Phillips is the last one. News coming out in Cogensis yesterday that the company is looking to hike cigarette prices. The counter is doing well. Is it the best play here? What should one do with Godfrey Phillips? Vivek, very fast, 1 minute. What's your view on Godfrey?
Well, one line view, ITC is better.
Okay.
In the sense, from a valuation point of view, it's more expensive than ITC. ITC's got a better business fundamentals, a solid cash machine in ITC, both in the tobacco business, which they have better utilization in terms of creating new growth engines. They have just, I mean, firstly in FMCG and other, and all of those businesses seem to be clocking very reasonable growth rates. The FMCG now is profitable also. Hotels is seeing an upturn. Paper is seeing an upturn. So, and valuation, ITC is significantly cheaper, much higher return on equity and cash flows than Godfrey Phillips. I mean, ITC is a preferred bet.
Chintan, what's your view on Godfrey Phillips?
We're not too very bullish onto Godfrey Phillips. I would rather take, neutral to bullish kind of a call on Godfrey Phillips for two reasons. The kind of a revenue growth from cigarette as a sector has been declining by approximately 38%. But when you look at the kind of the other sectors, the pan masala sector, wherein it has gotten more of energies now. Now this particular sector is taking a lot of boom. When typically you look at the consumption of all this particular pan masala and everything in states like West Bengal, Orissa, that's where the major revenue comes in from. It's also targeting major states like Gujarat and Rajasthan with their extensive marketing reach. So I believe it might not be a lot of run up. The valuations are a little expensive on the side. We are not very bullish onto it. Again, to repeat, it's neutral to bullish kind of a stance onto Godfrey Phillips. Okay,
and final word, Avinash, on Godfrey Phillips, what do you say?
No, I think I would also be neutral. In fact, I would second Chintan's view that the cigarette business is not growing all that great. But yes, if you look at the capital structure of the business, Darshan, it's an excellent business, a 10 crore equity, zero debt business. And, as you rightly said, yesterday there was some news flow that 6-7% prices could increase. So the intensity for increasing profitability is quite significant. Last year they did a profit of around 135 odd crores. So I think valuations definitely are expensive. But if it does come down, say by about 10-12%, then I think one could look at a scenario where one could definitely look at a better risk reward. Purely looking at the capital structure of the business, the overall intensity in the business is much better faced by ITC, which probably is a much better player on the cigarette side. So neutral on the call.
Okay, so that's the view that's coming in on Godfrey Phillips. It's a neutral to slightly bullish call from both Avinash as well as Chintan. Vivek does not like the counter. He says it's better to just switch to an ITC. Before we wrap up on the show, here's a quick recap of all the guest views of the stocks that we've covered till now. Okay, Avinash, Chintan and Vivek, thank you so much for joining us on the show. With that, it's a wrap for today's Hot Money. Ask BQ comes up next. Stay tuned to Bloomberg Quint.